Hey everybody, Gary with Basecamp Trading. Let's take a look at a setup we had in crude oil futures today. When we came into the room, you could see that during the London session, crude had triggered a reversal doji to the downside, and it started working its way lower. It caused all the moving averages to cross to the downside, and then we kind of chopped around the 50 EMA for several hours. And again, we know the 50 EMA on these 30-minute charts are significant support and resistance. And then we finally got a close under the 50 EMA, and we set up a 30-minute bear flag right here. We had bearish momentum. All of our moving averages crossed to the downside. We had the 200 underneath us, and we know this is also an area of significant support and resistance. And we ran right down to it and actually hesitated a little bit there, but then you can see it just broke through. And after you broke under the 200, it was bombs away in crude. We got significantly undervalued, and we traded down into some targets, and that was a good place to exit the trade. But we had a nice 30-minute bear flag that triggered, getting us into the trade, and then we were also managing this off of the Renko chart, and you can see that we drew in this compression zone here in crude. We had a significant pivot low at 63.29, significant pivot high at 63.57, and you could see for well over an hour we just chopped around inside that compression zone. We were just pivoting up and down inside that compression zone. We did have a little hint that we could potentially break out to the downside because one, we had a bearish 30-minute chart, but also inside this compression, we were making lower highs inside this compression, which was another hint that we might break to the downside. All of our moving averages were in alignment. We triggered the 30-minute bear flag, broke out a compression, and then crude just, again, bombs away. These are our gravity lines. The gravity lines help us maximize our profits, and you could see that we had several levels on our way down, and then we had this hot line. The thicker lines, we call those hot lines, and those are lines that prices reacted to over a longer period of time, numerous times too. So we had our hot line down here, actually had another line at 61.72, which is where actually it exited the trade, and then we had our ruby line down here at 61.55, and that ended up being pretty close to the low on that run down. At this point we were deep significantly undervalued on the 30-minute chart. In fact, we'd actually hit at that point, we'd hit significantly undervalued on our 240-minute chart also. And then of course crude's kind of made a bounce off of that after making that giant rip to the downside. But our break of the compression line was actually 63.26, and again, just depending on how you managed your trade off of that, easily a potential for $1,000 or more. That was almost a $2,000 rip to the downside on there, so definitely lots of profit potential on that initial rip. It just depends on how you're managing your trade, what your profit targets are, and how you want to take advantage of that. But you can see our Trender Pro indicator never took you out. We had a trail stop failure right here. That was the closest thing because we had the trail stop bar, but then the next bar did not close up. Had that next bar closed up, that would be an exit based off of using the Trender Pro 2.0 system, but we didn't. We ended up with a trail stop failure and then just continued down for a nice rip lower. So again, nice potential downside move in crude. Again, just depends on how you're trading it, what your profits would have been, but definitely opportunities to grab more than $1,000 per contract on that move. You also, if you're not a Renko chart trader, we also had pretty decent setup off the 5-minute chart. You can see right here, we had this initial compression break right here, triggered a 5-minute bear flag and pushed down. That would have been good for up to 3 targets or $300 per contract. Then you kind of pulled back and you went into compression again. And then you had this little double bottom right here. And then you broke underneath that. And that double bottom was right there also at 63.27, which was the same compression point that we had on the Unirenko chart. And when you broke that, you had a nice bearish lead into that. That bar opened right here, closed right at the bottom. The entire body of the bar was all selling. All of our moving averages were in alignment. You were actually triggering, at that point, you're actually triggering a one green finger, which is a bearish momentum setup. Momentum went bearish, and again, crude bombs away. Nice rip to the downside off of that. That potential low was all the way down at 61.49. Of course, nobody's picking tops and bottoms, but again, nice potential for a nice rip to the downside, also off of our 5-minute chart. So, some nice trading opportunities on the short side in crude today.